Hi guys, welcome to this time's Scrolling Finance. Last week was pretty bad for every bond investor. The bond yields had increased almost 10 base points in every term during first few days, then turned to decrease to half of the extent since last Wednesday. Sentiments in bonds market experienced a roller coaster shock. Some of investors were under the stop loss line and cut the loss. The rest of them just underwent the harm and waiting for the opportunities. So, do we need to tolerate the bleeding to expect the interest rate cut? Or should we just cut the loss and consider the possibility of bonds market trend reverse? Well, let me show you what happened in last week. In terms of fundamentals, inflation data was released last weekend. The CPI was minus 0.7% year-on-year, weaker than expected one minus 0.4%, and previously minus 0.5%. And the PMI was minus 2.2%, weaker than expected one minus 2.1%, but better than previous one minus 2.3%. So both PPI and CPI was affected by the misalignment of the Spring Festival holiday when the consumption and production performed weaker than same period of last year. Besides, the resumption of production and work was slow as well. This data implies that China's effective demand is still insufficient, which will slow down the economy recovery. Financial data showed both good news and bad news of economy recovery. The whole picture was good for the financial part if you take the first 2 months as a whole, but the structure wasn't that healthy. The net financing of government bonds was almost 1.7 trillion yuan, increased 1 trillion yuan compared to the same period of last year, which constitutes the majority of incremental part of the aggregate financing to the real economy. But the renminbi loans to the real economy in February was 650 billion yuan, which has been the minimum of every February since 2015. Furthermore, corporate part was only 170 billion yuan, as half as last year this time. Loans to enterprises and public institutions also decreased 1 trillion yuan to 870 billion yuan compared to the last year. For residents' part, household loans increased almost 200 billion yuan thanks to the short-term side of it. So we can conclude that the increase of whole social credit demand was still backed up by government financing mostly, and the residents' consumption had a sign of stable. But the corporate financing and the housing demand, which can be sought in medium and long terms of household loans, and net financing of corporate still need to improve. The SAC Composite Index performed well in recent, maintained a stable position above the 3,300. The AI trend brought a structural bull market situation, which affected the bonds market through a stock bond seesaw effect. Bond yields increased significantly. All in all, bonds market decreasing trend wasn't as solid as before. For funding conditions, the financing price was still around 1.8%, but there was a rumor that the minimum guide financing price 1.8% that big banks lend money to other agencies was cancelled by the PBOC. Now we knew that the rumor was untrue. As we mentioned before, the purpose of the PBOC hasn't changed, so the financing price can hardly decrease. Financing price represents attitudes of the PBOC towards bonds market, and the PBOC prefer hard money to flow into the real economy, which is like manufacturing, agriculture, services, instead of capital markets. Good news is that after almost 1 month bond yields increased, most bonds narrowed negative carry, and most CD with yields 2% around even have 20 basis points carry with the financing price 1.8%. So we can finally fund our asset, bring our investment account some real fixed income. For bond investment, I'm pretty sure last week was very impressive for every investor. Bond yields had increased 20 basis points within 4 days first, and have decreased 7 basis points reversely since Thursday. No matter long size or short size have experienced a great shock by that, and many of them cut their loss before the bonds trend reversed. Needless to say, it was a real bad feeling that a bonds trend suddenly turned with you once you cut your loss. So the best strategy now is holding your position and waiting, but which is a big challenge to the stop loss line of investment accounts. But you can never get your loss back once you cut your bleeding position. The loss caused by beta can be earned by alpha with times. So patience and an enough low stop-loss line are the most important elements that you needed for bond investment. So as always, if you want to know more useful finance information about the Chinese bond market and the economic situation, please like, share, subscribe. I will always be here, share my understanding, bond investment strategies and experience, and waiting for you. So bye guys, until next time.